Okay, so now let's get into the good stuff. What is my price target for gold and silver? We're going to discuss the miners here a little bit, but we're going to focus on the price of gold and silver over the next year. Or the last year, I nailed it. I couldn't have done any better. But we'll see if my accuracy, if I maintain the same accuracy over the next year. We'll go ahead and leave this video posted and we'll find out. The precious metals have just had a massive breakout and they could be set to explode in price. So the question becomes, how high can the price of gold and silver go, and what could possibly derail this bull market? I'm going to explain this to you in one simple, fast step. Let's start by going over what the F just happened to the price of silver. And I want to be clear, we're going to look at a silver chart right now, but editor, as I'm going through this, let's pull up a chart of gold and the gold miners. Let's look at the GDXJ, and they have had a huge breakout as well. But getting back to this chart of silver, today's date, well, September 1st, going all the way back to, roughly today's date. I think it might be the 2nd today. But anyway, this chart goes from September 1st all the way back to August 4th. So about the last month or so. And we go from $37 up to that key resistance level that we just broke through at $40. So I guess that's the punchline right here in the chart. I let the cat out of the bag. It goes up, it goes up, it goes down, but then straight up past that $40 mark. But like I said, it's not just silver. We look at the price of gold, it's at all-time highs. And look at how good the chart looks for the GDXJ. Now, before we go any further, I want to go back in time about a year where I actually predicted where I thought the price of gold would be a year from that video, which would be right around today. Editor, you can go and help me out with that and show the clip. So my price prediction for gold moving out 12 months, let's say we're at 2,500 right now, in nominal terms, I would not be surprised if the price of gold got up to $3,500 within the next 12 months. So I absolutely nailed that prediction. And I'm not telling you that just to brag. I'm actually just telling you that to make sure that you stay to the end of this video, where I'm going to give you another prediction on where I think the gold and silver price will be in a year from today. You see how I did that? It's a little YouTube trick. But the big key here in this huge price move is that it's really a result of central bank buying. Now let me back up a little bit. Not really in the silver price move, more so in the move that we've seen in gold, but usually in these precious metal bull markets, you see the price of gold go first, and then in percentage terms, the miners really accelerate past, and then usually following all of these moves is the price of silver. So in a way, they're kind of just a derivative in my mind, like a turbocharged, leveraged derivative of this guy, the price of gold, which has gone up almost exclusively as a result of central bank buying. Exactly what we said. Why is this so important? Why is this key to try to figure out where the price is going next? Because this means that there's really almost zero retail interest in the precious metals. Now, I know a lot of you watching this video are probably really interested in gold and silver and the miners, but you are a rare breed. You are the minority. In fact, I just spoke with someone that's an expert in the gold space, and he says that all of the gold dealers, the physical dealers he's actually talking to, have seen net selling from retail. Editor, go ahead and cut to the clip.
I have a pretty good feel for that from my contacts and friends in that industry, you know, on the ground in the foxholes, as it were.
Yeah.
And they're telling me that it's mostly been selling at these prices.
Really?
Yeah, because a lot of the buyers, you know, a lot of the gold bugs are aging out of the market.
So to me, this is a really big deal, because if it was just gold being at all-time highs, I might say, is it really a good time for me to add to my position? But if it's at all-time highs, it's got a great looking chart, it just had a breakout. In addition to that, we really see retail as net sellers. To me, that means we're probably only in maybe inning 4 or 5 of this bull market. But that doesn't mean this bull market can't be derailed. There are a lot of risks out there for the price of gold and silver. So what would turn this bull market into a potential bear market? Editor, let's cut right to the internet. Let's start by looking at a chart of gold and zooming out. We're going to look at a 20-year chart. What I want to focus on is the GFC. So we see February 10th, 2008, the price of gold right around $972. And this is a monthly chart. I actually wish this was a daily chart, because then we would really see the volatility, especially the downside. But you get the gist of it by looking at this chart where, again, February 10th, we're starting right around $970. And then we fast forward to October, we're down $732. So a significant decline. Why was that? Because the GFC was really a liquidity event, as most of you know, and gold was doing its job. So if you've got gold on the balance sheet and you're a big pension fund or hedge fund or financial institution and you need that liquidity, well, if you're not getting a bid on any other asset on your balance sheet, you got to sell gold. You have to have those dollars. You have to have the liquidity to actually survive. So you sell whatever it is that doesn't have the counterparty risk, therefore has the bid. And that's why I say gold is doing its job. And then we fast forward to the cerveza sickness. Now, again, this is just a little teeny dip right here, but I remember that well because I was doing videos, and gold went down by a lot more than this little teeny dip. And you would really see that if we had a daily chart instead of a monthly chart. If my memory serves me well, I think we were down maybe 15-20% just in that first 2-week period in the month of March. But we can really see this if we look at a chart of silver. So look at the move here during the GFC. We go from $20 straight down to basically $9.50. I mean, it gets cut in half. I mean, that's a big bear market within an actual bull market. And then during the cerveza sickness, we see a bigger decline here. And again, if that was intraday, you would have seen a much bigger move, more volatility, especially to the downside. So the main point I'm trying to make is the one thing that could really derail this bull market would be a severe recession, especially if we had a liquidity type of freeze like we saw during the GFC. And this is why I would be a little more bullish right now on the miners and gold than I would silver over the next 6 months. Because if you're someone that believes that the United States economy is slowing down, that the labor market is probably deteriorating, and if you're someone that believes that trend is likely to continue until we go through this cycle, then for me, I'd rather be in gold and the gold miners instead of silver, because it has that industrial component. And that's exactly what we saw play out during the GFC when, again, the price of silver went down much more than the price of gold. But I want to be very clear. I'm by no means bearish. I'm just saying that these are some risks that we definitely should be cognizant of, especially if your time frame is just the next 6 months. Now that we've gone over the bearish argument and some of the risks, now let's get back to the bullish argument. So for this, I want to go all the way back to 1990. And for you younger folks, there was a guy that was an absolute legend. He was a legend of the legends. He's mentioned many times in the Market Wizards books as an example. And he was kind of like almost a mentor to a lot of the top hedge fund managers that you see today. His name was Marty Zweig. And in 1990, he came out with his rules for being a successful investor or a successful trader. And I want you to look at what the number one rule is on this list. The trend is your friend. Don't fight the tape. Now, that said, let's go back to the silver chart, but instead of going back 20 years, let's just go back 1 year. And you want to talk about a great looking trend, just go back to January 2025 and look what we have done. And like I said at the very beginning of this video, we just broke through, let's just say, if you want to call it that, a resistance level here at 39, just break straight through maybe a psychological barrier at the $40 mark. And today, as we speak, it's trading at $40.82. So this is a fantastic looking chart. And if you're looking for a trend like Marty Zweig suggests, I don't know if you can find one that's better than silver, with the exception of the GDXJ. Let's go over to that chart right now. So this is a trading view chart, so a little bit different look, but we just go back a year, and right here, 2025, January or so, you just see almost a straight line up. We had some hiccups there, I'm guessing right around Liberation Day, or what I call retardation day, but with the exception of the retardation day, we're pretty much going straight up. Now, we had this consolidation, but once again, we see this big, huge breakout more recently. And this is what Marty Zweig and the legends of investing, the guys that you read about in the Market Wizards books, this is exactly the setup they would look for. Now, before we move on, I want to give you a little more insider intel or some insider strategies. The very best hedge fund managers that I've had the opportunity to talk to have always said the same thing. When they're looking at an asset, they would much rather, if they had the choice, they'd much rather buy at an all-time high than they would at an all-time low. And what they're saying is pretty much exactly what Marty Zweig was saying. But that doesn't necessarily mean that they're buying things when they're just expensive. The secret here is to buy something that is hitting all-time highs, but is completely unloved, or is kind of flying beneath the radar. And that goes back to the key that I was talking about earlier. If this was a blow-off top as a result of retail getting involved, and to illustrate this, editor, let's go back to the 1 year chart of gold. If this breakout here that you're seeing, or this whole move up, was just a result of FOMO, the retail investor just turning the stock market into a casino, or something like fart coin, or some crypto coin out there, then I would be very hesitant. Then I don't think the pros would say, okay, just because it's at an all-time high, I'm buying. Again, the secret is to find something that retail really hasn't gravitated to yet. And if you can find that with a great looking chart, a great looking trend, and you can get in at an all-time high like gold, I think that's really the sweet spot. At least that's how I'm looking at it for my own portfolio. This isn't investment advice. This isn't individual investment advice. I'm just telling you the strategies that I try to employ and my thought process and some of the wisdom and experience I've had the opportunity to be privy to from some of these hedge fund managers that I've spoken with in the past. Okay, so now let's get into the good stuff. What is my price target for gold and silver? We're going to discuss the miners here a little bit, but we're going to focus on the price of gold and silver over the next year. Or the last year, I nailed it. I couldn't have done any better. But we'll see if my accuracy, if I maintain the same accuracy over the next year. We'll go ahead and leave this video posted and we'll find out. But let's start by going over this. This isn't an actual chart. It's just a kind of fake chart that I drew just so we could get the concept as to how this cycle usually plays out. Now, just because it's played out this way in the past doesn't necessarily mean that it's going to play out the same way this time, but it's all a game of probabilities at the end of the day. There are no certainties. And if something has happened over and over and over again throughout history, it doesn't mean that it's a certainty to happen again. It just means that we have higher probabilities. So we've got to pay attention to that. All right, so this green line represents the price of gold, and obviously I'm wildly oversimplifying here. Nothing goes up in a straight line. But the bull market in gold, it goes up, 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 and usually you have the miners, the blue line, it kind of lags, and then all of a sudden it starts picking up steam, and it goes higher and higher and higher, and then it just moons straight up, and it surpasses gold to quite an extent in terms of a percentage move up. But as you guys know, that's not where the story ends. Good old silver right here in red. Usually it not only lags gold, but it also lags the blue line, the gold miners, until we get to a tipping point where the retail investor really piles in. And that's when you see it go completely parabolic. And in percentage terms, it goes up higher than gold and often higher than the gold miners themselves. So what do I think the price of gold and silver will be in 1 year? Okay, so getting back to the price predictions, I've broken it down into 3 different categories because, like I said earlier, I don't know if we're going to have a GFC liquidity type of financial crisis, if we just have a garden variety recession, let's say like the dot-com bust, or maybe we have no recession whatsoever. Anything is a possibility, and this would dramatically impact my price prediction. So first and foremost, let's assume we have a GFC price in 1 year of gold. I would say 4,000. And for silver, I would say 50. Why is that? Because I think that the Fed is so proactive and the Trump administration is so proactive that even if we do get some sort of financial crisis, they're going to step right in, and the market is going to perceive that as putting a Band-Aid over the problem. Very similar to when the Fed started doing QE in late 2008. So we could get that big dip down, but then I think the price just rocket backs up to where it's lower than it otherwise would have been, but it's still higher than it is today. And the reason I would have silver going up a little bit less in percentage terms, even considering this chart, is because it has that industrial component to it. So if we do have a big crisis, then silver is going to take it on the chin, and you're probably going to see a lot more volatility, again, like you saw with silver and gold during the GFC. Okay, now let's go over what my price prediction would be for gold and silver if we just kind of have a garden variety recession or a balance sheet recession, similar to what we had during the dot-com bust. Here, I'm going to go 4,500. We'll start with a dollar sign this time. And with silver, I'm going to do 60. There we go. And pretty much for the exact same reasons that I discussed here, it's just this would be a lot more severe. Now, no recession, this is where it gets very, very interesting. I think gold goes to 4,500, the same. I'll explain why in just a moment. Silver, here, I'm going to go with 70. And the reason is because, going back to the GFC, when the government steps in, or the Federal Reserve steps in, mechanically the Fed really doesn't do a lot, but psychologically they have a big impact on the market because the market perceives the expansion of the Fed's balance sheet as quote-unquote liquidity, and this could be a huge tailwind for the price of gold. So if we get just a slight recession, you have all this fiscal come in and all of this monetary policy, let's call it, I think that could just quickly drive the price up to gold to where it's pretty much the same as if you didn't have a recession at all. Obviously here, you just have a lot more volatility. But I think with no recession, because the industrial component, silver, goes up a lot more than it otherwise would have. That's why I've got the 70 price target for this red line right here. But I think the key when you're trying to figure out where the price is going to go is actually looking at the labor market. And in a way, I guess you could say that the financial crisis, .com, just garden variety recession and no recession is just another way to say the labor market. Because in number one, the unemployment rate probably goes north of 10%. In number two, maybe it goes to 7, 8%. In number three, it probably doesn't even go above 5. So since the retail investor needs to really get into the game to make this price really skyrocket, I think the one indicator that I would look at, if I had to choose just one, to determine kind of what's happening beneath the surface and what's likely to happen in the future, would be the labor market. Because at the end of the day, we all know that once the fart coin buyer moves over into silver, it could go a hell of a lot higher than 70.